And so it looks like Russian fuel oil is heading to the Middle East and Asia.
Yeah, those two reasons already, according to a lot of statistics that Bloomberg has reviewed, have already picked up on their imports from Russia. This has all to do with the EU starting to step up restrictions and planning to impose sanctions, a ban on Russian oil by year end. Both regions have been taking greater shares of Russian shipments since the war broke out, Russia invading Ukraine. And data from the S&P Global Commodities at Sea highlights how the EU sanctions are really spurring this huge shift. Morgan Stanley notes China and India, for example, saw a 54% increase, combined increase just last month in the Russian oil products they're taking. And one way that the Russian products are being shipped to Asia under the radar is through these large shipping hubs where there's a lot of redistribution. Some of the Russian blends are mixed with other products and relabeled. So that's a lot of what's going on. This is a shift that's going to be closely watched in the months to come. Meanwhile, we're seeing volatility in oil prices, as we mentioned at the top of the show. The latest U.S. and London trading saw West Texas Intermediate and Brent dip earlier in the sessions due to concerns about the Fed and its upcoming rate hike, but it recovered as the dollar weakened. The dollar has been a big driver of late. Bigger picture, there's a lot of potential bearish headwinds coming because of the hint, if not actuality, of more supply. The U.S. has announced it's going to offer 10 million more barrels from its strategic petroleum reserves in November. And we are hearing from the UAE, the United Arab Emirates, easy for me to say, the UAE, that they're planning to boost output by as much as 5 million extra barrels in 2025. So again, 5 million extra barrels a day, and that is a sizable increase. And so the supply-demand equation tilts yet again. Back to you.